Morning, Fractal Effects team. We're still watching the market from the open. So before we get started, please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have an interesting setup here today. We have an upside expansion model. We had a double break to the downside, but right into a 4-hour fair value gap on NAS and right into the DSD low. And again, that is not a coincidence that it rejected off of that and gave us this 5M fair value gap, which is also our NYC fair value gap. Now, US 500, which is the stronger pair, it actually did not take the manipulation to the downside. It took a double break to the upside. So that's the dealer revealing its hand right there. So if we get a rejection off of a 4-hour fair value gap and the DSD low, and we get a double break on the other pair and that never even took the low, then that's our sign for a reversal. But we need to find a foothold still. NAS is yet to actually break the top of the manipulation range. It might do it here. But as soon as you get a double break, remember, we want to see a retracement. That's where the crossover happened on US 500. Looks like we're getting close to getting an actual confirmation as well. So if we get that confirmation, then we are 100% bullish. Remember, the double break is the dealer revealing their hand. It's only until you hit a higher time frame PD array though. We hit a 4-hour, we hit the DSD low, we had a buy model originally, and we have an upside expansion model. So this confirmation is the final piece of confluence to let us know that this thing wants to go up, but we still have to wait for a proper retracement. We did not get one after that double break. Remember the sequence of events. Remember the checklist. Double break, retracement back to one of our key zones, then a 5M fair value gap. Otherwise, you have a runaway market, which you can't catch, which this could be. Today is Thursday. Thursday usually leads to a retracement. I should mention that US 500 also failed to hit that higher time frame PD array, that 4-hour fair value gap, which was sitting right here in the purple. Two minutes, 38 seconds left. I want this confirmation to stick. I want to see a proper retracement, maybe even a deep retracement into this NYC fair value gap. Let's wait and see. Be patient. Got a lot of time ahead of us. So we did have some news drop today at 8:30 Eastern Standard. So we have swept out all-time highs again. Remember, if you're looking at a stock and or any indice and you're already at all-time highs and you're trying to figure out where it's going to go next, make sure you watch the video in the master class that goes over the higher time frame analysis. It shows you how to figure out that projection. Lets you know how we figured out this DSD high. That was something we painted out months ago. So you're going to see some reaction off the midpoint of this for sure. "17 seconds left. I think we'll get this confirmation to stick. Okay, so there's our confirmation for both pairs. Still want to see a deeper retracement. I want to see this 20 EMA tapped. Otherwise, it's a runaway market and I don't care. Now we have a blue zone under here. But I suspect the market wants to come down at the very least down to the DSD high on NAS. Look at the consolidation. This is not a coincidence. Consolidation, bounce off of here. Consolidation in this zone. Consolidation here. These zones were painted out first. Then you saw the consolidation happen in that zone, not the other way around. These zones were not, or these zones are rather not showing you where the consolidation was, and therefore alluding to some liquidity zones. As mentioned before, this is a market translator. This zone was painted out first, before we ever even hit the DSD high, or DSD low. Forget about this 4-hour fair value gap for a second. Forget about this 4-hour fair value gap for a second. Bang, we hit that DSD perfectly. Forget about this 1-hour fair value gap that I painted out. The indicator painted out the zone long before we ever hit it. This is where the crossover happened. I'd like to see it come back down. Let me see if, yeah, obviously this was tapped. Just to kind of show us where it could retrace back to. Because we had a double break, I'd actually like to see a deep retracement. But at no point am I looking for a sell now. Too much confluence here. Upside expansion model, buy model. Even though we had a double break, we hit the DSD low, created an NYC fair value gap the market respected. Confirmation on both sides, double break to the upside on US 500. Too much confluence here saying that we're going to go up. I'm not looking for a sell. Even though today is Thursdays, and Thursdays do like to retrace back to the weekly range, And there's the weekly range right there, that aqua line, right under this 4-hour. Just waiting for a retracement still. Still just gesticulating here. I want to see a proper, even a 5M bearish fair value gap created as it comes down to these zones. So the blue zone here is lined up with the DSD here. Remember that when you're looking at diverging pairs, you're going to find points of reference that match up. They're not going to be the same ones, but there are going to be ones that match up. The DSD high is matched up with this blue zone here. That's not a coincidence. There's your push down. Let's see if that gives us our 5M bearish fair value gap that we're later going to use as a foothold and an inverse to climb up. Remember, stick to the rules as is. I assure you, and I promise you, that there's bigger, better setups that follow every single point of confluence on our checklist than there are on days that don't. As mentioned before, you're going to get days that you have runaway markets, you know, that you can't always get a foothold in, and they keep going and they keep going, and people get FOMO and da-da-da-da. But if you stick to the actual checklist, follow the strategy to the T, it'll be fine. I promise you, you'll be profitable. Still want to see a retracement, proper retracement back to the 20 EMA here. 20 EMA here, and most likely 20 EMA in the DST high here. And in doing so, I want to see a 5M bearish fair value gap created that we are going to use as a foothold to climb up. About 15 minutes away from 11. Slowly starting to get that 5M fair value gap now. Let's see if it sticks as it makes its way down. I'd actually like to see a deeper retracement right here into the 50 to 61% past this. But let's see. First things first, I want to see a fair value gap left at least, and for it to come down and touch the 20 EMA. Why do we have two Fibonacci set here? It's perhaps an old one. And then on the 4 hours, I want to check something here. It's right at the midpoint, actually. I don't need to mark that off. Just want to know the midpoint of the previous 4-hour candle so I can mark if we're above or below it. It's right at the midpoint here. So we did not leave a 5M fair value gap. Yeah, I'm not satisfied with that retracement. Yeah, that wasn't a deep enough retracement for me. I want to see it touch the 20. Again, if it keeps excuse me. Again, if it keeps running from here, it keeps running from here. That's fine. Just trying to get some consolidation here. Now remember, a consolidation usually leads to a manipulation and then an extension. So the longer it consolidates here, technically the better. That means there might be one last drop happening. That'll fulfill and satisfy our checklist where we get that proper retracement. I'm going to push up. Two minutes left in this candle. I see another one print as well, and that'll solidify kind of this power of three that I'm looking at. Make sure you understand all the terminology before getting started. Make sure you read, or rather watch, all the videos in the Learning Hub or Masterclass. Know the strategy inside and out before you get started. Practice. Practice, practice, practice in a demo account until you feel comfortable. So either one of two things is going to happen. Either it's going to give us our retracement and probably set up, like I said, let's see if we get a proper power of 3 here. Consolidation, manipulation, extension. Or it's going to be a runaway market. We're not going to get in either way. Just going to paint that out. Definitely a little bit more prominent here on NAS. More consolidation on NAS as well. Now the 20 EMA is moved up. It's technically sitting in this fair value gap here. And we've had no double break on NAS yet. Remember, whichever asset you're trading, that's the one that has to give you the full confirmation. Even though we have a bullish confirmation here, remember we had a double break to the downside right into this DSD low. And since we're at all-time highs, you want to aim for the midpoint of this higher time frame DSD, 22,438. This is a CFD contract. Keep in mind this strategy works across the board, CFD futures. It's just I personally started with CFDs as far as the broker and everything that I set up, and I'm just comfortable. But yeah, oil, gold, indices, Forex, doesn't matter. Same strategy. US 500 is already kind of broken up out of this consolidation to the upside, which could then also signal another push down. Remember, power of 3 doesn't always have to have a manipulation move, but the ones that do are the ones that we want to focus on. The ones that don't have a manipulation move, that's just a runaway market. There's different versions of a runaway market, but we don't get the foothold we're looking for. We can't enter any position. Let's see if we get another consolidation up here. The other reason we're looking for a deeper retracement is so we actually have enough room to grow up past this and into here. That's not really a 1 to 3 because it could retrace all the way down here. I don't like how much of the NYC fair value gap they've left open. And that's the same gap over here that, same thing, just barely tapped. And since we had a double breakdown to the downside, I kind of want to see a deeper retracement first. Even after it takes this high. Or once it takes this high, that will signal a proper double break on NAS. So we've already taken the highs again here. One minute, 27 seconds left. I want to see if this candle also closes within this consolidation range. US 500 is still the stronger one. Guys, we've created an ebook for you that shows you how to do market analysis like a pro. Just a little gift from us to you. All you got to do is go to fractaleffects.com, hit the buy now, and just sign up, but you don't actually have to purchase anything. That way we'll have your email address and we will email you the ebook. Great place to get started if you're a beginner. Even if you've been trading for a while and you've been unable to find your rhythm and flow and find a strategy that works for you, it shows you how to do top-down market analysis properly. So again, consolidation. This could be the manipulation move that starts the proper retracement. Maybe we can get a double break. Manipulation will lead to a double break and then a proper retracement and then an extension. I just don't feel comfortable buying here. This is not an area of interest for me. Still like it down here or from here. But I want to see a proper retracement after I get a double break. A lot of things happening. Higher time frame down here, higher time frame PD array, the 4-hour fair value gap, but then we're also sitting inside of this bigger daily standard deviation. Got to proceed with caution. Today is also Thursday, which leads to a retracement, but we have a double break and confirmation to the upside, so our probabilities do decrease. I want to see a proper retracement. With 22 minutes left in our stream. And just a whole bunch of consolidation here. Now we broke out of the range. If this was a true power of 3, we wanted the bottom of this to break. Manipulation to the bottom side, sweep out this, maybe even tap down here and then push up. Up here it could just mean that we could sweep out the highs and then drop. You want everything to fall in suit with your bias. If we're bullish, you want this bottom to break. This is the better area of entry. Especially this late in the game, I'd like to get in down here and go for this high. Even after we get a double break. So if we get a double break, I'd still like to see it retrace down here and then take out that double break. Again, if it pushes from here, that's fine. It's not something I'm interested in. That would create a double break though. I want to see if it actually gives a proper retracement after that double break. Again, we have NAS on the left, US 500 on the right that we're using as divergence. Our diverging pair has already given us a double break, but we want to see a proper double break from the pair that we want to actually trade. This could be it. We've already had a double break to the downside, so you need this double break. close. Now there's a high probability that you will get another retracement after a double break. Not 100%, but a high probability, 70% higher, 70% and higher, that you will break this high and then possibly get another retracement. There's the double break. That could also be the manipulation move out of this power of 3. Now again, if it keeps running from here, that's fine. I want to see if it actually gives us a proper retracement now back into this area, at least to sweep out this low. There was never a 1 to 3 here for me, from here to here. This is where I want to catch it. And again, if it keeps running, it keeps running. That's fine. We've already had more than enough victories this week. When you wait for all points of confluence, you can't feel guilty about it, even if it is a loss. And like I said, following all those rules made us profitable this week. So we don't even care if another thing sets up. Your goal at the beginning is to just get one successful trade at 1 to 3 risk to reward. That'll slowly grow your account to 12% a month. Risking 1% to make 3%. Minutes left in our stream. Not sure if we're going to get that retracement in time or at all, but nevertheless, that's what we were waiting for. a proper 5M fair value gap to be created, a bearish one, which we didn't get. I don't like this short retracement. US 500 never even touched the 20 EMA. Technically, neither did NAS. Look at this. Never actually touched it. On a day like this where you have a double break to the downside, you want to see more confluence. Let's see if we get any kind of retracement in the next two candles. Still nothing of interest. We do have the double break on NAS. I want to see a proper retracement. I want to see the 20 at least touched. I want to see potentially a bearish fair value gap created. Otherwise, this still, even though it's moving slow here, this is still a runaway market. As mentioned before, a power of 3 doesn't have to have a manipulation phase. It can have a consolidation and then just an extension. But or rather distribution, but those are the ones we don't want to get involved with. So either this is a manipulation and we're going to drop. We also have a double break. We're going to drop from here. Or this is not a power of 3. This is just a consolidation and a distribution, which we don't want to be a part of. That falls in suit with the runaway market. It's created no foothold for us to climb yet. I don't want to get a 5M fair value gap up here. I want to get a 5M bearish fair value gap first, and then an immediate rebalancing candle, and then a 5M bullish fair value gap down here to take all the way up here. That's the pattern I'm looking for, and I don't think we're going to get that in the next 5 minutes. This is one of those things I could set up later in the afternoon, which we're not going to wait around for. We don't need to. These kinds of setups happen every day, multiple times a day. Here we're finally getting that push down. I want to see if we take out these lows. 2 minutes, 21 seconds left. Since we're at all-time highs and we're sitting inside this DST high, this could be a completed run. We've taken out London highs. So this could be, even though this is a buy model, it's technically met. It's technically met all the confluence needed to be a buy model. Remember, it's only a buy model until it's not. It's only a sell model until it's not. So maybe it's gassed out. Maybe this is as high as it wanted to go. It took out London highs. That's bullish. That's met the bias. That's why you got to proceed with caution. So that's, we can look at that as a manipulation potentially. And a potential distribution, at least into the midpoint of the NYC fair value gap. down here. Remember, we're still bullish though. So it's either a buy or nothing for us. And now that we're past our window of opportunity, I'm comfortable just walking away from this. That's our time, but come back, check it out, see if that actually became the 5M bearish fair value gap we were looking for to use as a foothold to climb back up. See if we come all the way down here and get the full 5M bullish fair value gap set up and how long that took. But that's our time. We'll see you guys next week. Please check us out on fractaleffects.com. Hit the subscribe